Howdy, folks. It's Jeff Camarda back from Key West and back in the saddle. I apologize for the horrific quality of that video that we shot, Kim and I, from the balcony in Key West as we celebrated our 21st wedding anniversary. But we felt with everything that was going on in the markets in the world, it was important to get that out. So we've got a bit better news. Then I'm recording this at 5 o'clock on Wednesday. The 16th, at midday, the markets were all trading markedly lower, following another busy and volatile morning. And most of the fear and uncertainty now is surrounding what's going to happen around Ukraine. The tech stocks and NASDAQ were struggling early trading. Cyclicals and small caps have been showing relative strength. And these are Jonathan's notes, of course. Thank you very much, Jonathan. But the short of it is, sooner or later, this market will roll over. And I don't know if this is it or this is just another head fake, and it may be months or years down the road. But we watch this stuff very, very carefully with an eye toward getting you out when it happens. There's a lot of reasons to think the market is poised for that. And when, conditions like this present, it really just takes, one little triggering event to shift, collective market thinking from greed, I guess, to fear, and then, a lot of folks head for the exits. And certainly Ukraine, the powder keg that Ukraine has become could be it. Who knows what Putin's game is. He may just be looking to bully Ukraine into giving up on its NATO ambitions, and maybe that's enough, or it may be, more aggressive and territorial. And who knows? It probably the most fearsome eventuality, in my view, is that given the long-time coziness and particularly the recent exceptional coziness between China and Russia, is that there are attacks on Ukraine and Taiwan about the same time, which really would put the U.S. and Western democracies in a conundrum, and certainly, I shouldn't say certainly, but very likely send the markets over the cliff. But that may not happen. The inflation news continues to be pretty grim. Consumer spending at the yin-yang through January, in the face of rapidly rising prices. And there were some late reports in the journal, I'm looking at my phone now, that the Fed eyeing potential for even faster rate increases to ease inflation. And I think that's really going to be, shoveling back the tide with the bucket here. The horse is out of the barn, as we've been expecting for some time. But in any event, that's pretty much it. The markets, by the way, to cap this this midweek report, bounced pretty strongly to end nearly flat for the day. And we don't want to overwhelm you with these videos, so feel free not to watch if it's too much. But in these especially scary times, we want to be proactive and letting you know that we're watching things and we have our finger on the switch and we're ready to make moves if we deem fit in order to protect the value of your wealth and your retirement and your family dreams when things inevitably turn the other way. So hopefully that's not happening now, but if it is, we feel we're very well prepared to deal with it and keep your wealth intact. And that's more than enough for today. Thank you, folks, so much for watching. Let me move this computer with my notes to this point over here to get to the switch, or I can turn the off button and bid you all pleasant Wednesday evening or Thursday mid-morning, depending on when you get this. Until next time, this is Dr. Jeff Camarda signing out. Goodbye.